So welcome again. We're looking at a buy opportunity in Euro GBP. We're looking at the corrective structure right in the middle. Okay, so I want to see this as the first move. Okay, which is three-wave structure to the upside, three waves back, and then I would like to see this push up a little, either in the 5 waves, or if you push up a little, come back, then we'll go again. Okay, this will make a perfect structural sense. You get? You get it?
Yes, Mr. Nath. Yes, Mr. Nath. Thank you.
Correct. So now, why did we jump in at the level we jump in? We brought it down to 4 hours time frame, and we saw that when it was here, we had a perfect corrective structure upside. Right now, I want to take this as a corrective structure for more upside. At least minimally, we expect it to break this top for anything to happen, whether reversal or retracement or whatever, it must break this top. Okay, so and what I do is to look at either psychological level or sub-psychological level above above this top, and that spot happen to be 87. So you can choose to TP at 87. Okay, 87, and that does not mean that the pair cannot still go further, but that is a moderate target. All right, and we got in at around 86, 32 or so. So we are up for like 30 pips now. Okay, so that's it about Euro GBP. Then good. Okay, if you look at gold on weekly, I've been saying for quite some times now that gold is piling up liquidity below this low. Okay, whenever you have a pair that make this kind of structure impulse, then this correction comes this way and make equal low. Don't expect that you have a strong push to the upside. Expect to have it play along here. Break, take up this liquidity before you have it move to the upside. Okay, if you look at this, the same thing that is playing out here. Okay, three waves. Right here, what the structure I'm expecting is 3 waves down. I'm expecting 1, 2, 3, 3 waves up, then 3 waves down. This is the structure I'm expecting. All right, for it to make a WXY structure. Okay, and where is the WXY structure? 1, 2, and 3. Okay, where is the other 1, 2, and 3 here for the X? And then you have 1, 2, and 3, 1, 2, and 3, 1, 2, and 3. The Y will now be a form of WXY structure. Here is W, here is X, here is Y. And the Y itself, that is three-wave structure, will be W here, small w, small x, and small y. Then, by the time it comes to this low, we expect that this liquidity here must have been taken, and then we'll be on our way to the upside. Is that okay now? So that was why I took the buy opportunity on gold. And if you look at it very well, let me delete some stuff. If you look at it very well, if you come to 4 hours time frame, you will notice that, okay, you notice something that is very instructive. Okay, that's very instructive right here. Okay, it's developing equal low. Okay, this equal low is telling me that this market is still going to come here. Okay, still going to come here, you know.
Yes.
So you see equal low here. This equal low here is a sign to me that we have a lot of liquidity down here. All right. So, but because of the projection of a three-wave structure that I'm expecting here, a three-wave pullback I'm expecting here, 1, 2, and 3. I'm expecting this for more downside. Okay, and from the beginning of the structure here, you also notice that when I come to 4 hours time frame, I saw an engulfing candlestick pattern there. That to me shows that that upside that we have projected is going to come. Can you see the engulfing candlestick pattern here? Can you see it?
Yes, I can see it.
Correct. So that was why I call for buy. You know, we stop loss under here. Of course, if this engulfing, if you come down here and break this level, then it's no longer valid. Okay, that's why I put the stop loss at 11690. That's my invalidation level. But nevertheless, I expect this to make a move to the upside. That is good. Okay. Now, I also have I want us to take a look at GBP-CHF. GBP-CHF. Okay, I'll show you something that is very instructive here. You see, if you look at this pair on a daily time frame, let's say on the weekly, you see that the move is to the downside, still to the downside, and you can see clearly here you have corrective structure. Okay, you have 3 waves down, you have corrective structure, then you are having this. At any point, you should have a pullback and a drop again. Understand now? That is on the weekly time frame. At any moment, you should have a push to the upside. And what we're going to do is that we're going to look at daily time frame and see how that pullback to the upside, how we'll get it, how we'll be able to catch it. And of course, the pair is already developing a structure, a known pattern that give us the idea of a possible, drop to the downside. Okay, so it's already giving us that pattern. And if you look at it very well, this is daily time frame. You know, I don't joke with daily time frame. That's my time frame. You see it here. Okay, you see it here. If you plug in the indicator, you see clearly right here. The indicator is not making a higher low, but it's not making a lower low. So, and the price is making a lower low. So what is, what is telling me right here is that we are gradually losing momentum to the downside. We are gradually losing momentum to the downside. So what I want to see is simple. Right now, I have no setup on this pair. Why is it that I don't have a setup on this pair? The current flow of the market is still to the downside, as seen clearly from this indicator, from these candlesticks. Okay, you can see clear rejection. Okay, over here, and apart from the rejection you see over here, you also have a bearish move down here. So what I want to see is simple. I want to go to 4 hours time frame and see how the move to the downside is developing. Okay, and you see clearly here that we are beginning to see what we call an ending structure, building pool of liquidity to the outside, to the upside, and to the downside. In case you might not know what is called liquidity. Liquidity is what is called money. Liquidity is what we call money, money, money. All over here, they are pool of liquidity. That's to tell you that market is coming to grab all this. And at the same time, there are pool of liquidity right below this low. Okay, market is also coming to grab this liquidity. So now, so what's going to happen is simple. I'm looking forward to how this structure, this level here will be taken. I'm looking for how the market will take this structure to the downside. And as soon as it is taken to the downside, if, it flush down and immediately flush up, that is a clear signal that truly liquidity has been taken. Is that okay now? That is a signal to me that liquidity has been taken. Why? Why do I, or how do I know that liquidity has been taken? I will show you now. If this is a demand zone, for instance, if this is a demand zone, and there are a lot of institutional order right here, okay? There are a lot of institutional order right here. Then, if this market comes down with speed, okay, and immediately retrace up, it shows that there are a lot of orders here that it has picked. That's why it came down sharply and it left the zone sharply. So what you just do in this scenario is to wait for corrective structure back to the medium point, and then you take a buy to the upside. That's how I want to look at this pair. Right now, it's still within the fair level zone, and there's no buy or sell opportunity within this zone right now. Okay, no buy or sell opportunity. Okay, and if you look at daily, you want to see possible. You see, can you see this level right here? See this lowest level right here. When this market came here and grabbed liquidity down here, this is an example of what I was telling you. You see the speed with which this market came here and the speed with which it left. So corrective structure after that is a buy, it's a massive buy. That is it. So that's the same thing I'm telling you to watch out for right here. Let's watch out the speed with which the market flows down. And if it comes down this way massively and return massively, any corrective structure here will give you this trade, will give you this move to the upside. And as the pair is making a move to the upside, what do you notice? This liquidity here has been taken. Can you see? This one has been taken. That's why I told you that, liquidity is built both at the top and at the bottom. So this liquidity at the top is necessarily must be taken in order to take order for a buy, because all the people that are buying here, they have put their stop loss here, and those that want to do the real buy here, they need somebody to sell to them. And of course, the stop loss of the buyers at this level is read as sell order. It's a sell order. So when these sell orders, when this stop loss, which is sell order, when it is taken, there will be liquidity for those that want to buy here, the buyers. And that's what immediately push the market to the upside. Corrective structure move to the upside. Is that okay now? And that one I'm trying to take a look at is Euro AUD. Euro AUD. Okay. So this Euro AUD, when you look at daily time frame, you see that this pair actually, when it came here, we're expecting it to push harder before it will fall. Unfortunately, it did not get to where we wanted it to get to. Okay, and make this move. So right now, how are we looking at the structure? We're looking at the structure as something like this. Impulse, 1, 2, 3, 1, 2, and 3. We're looking for 1, 2, and 3. so that it will make a flat. And then as we have this wave to the downside, we also have another wave to the downside. This is how we are looking at this structure. And of course, we see that the structure has begun to play out as anticipated, but I would love to see it, I would love to see it this way. That's why I'm not getting involved. Of course, I call a trade right here, right at this level, but unfortunately we have to close it because of AUD news. Nobody knows what the news report will be, so it is dangerous to have an open position while news is on. Okay, I call this trade right here to the upside. And what did I see? Let me tell you what I saw before I go to the detailed analysis of this pair. You see right here that this market had a break of structure. Okay, this is a break of structure. Why do I consider this as a break of structure? I have to tell you quite frankly that there is a difference between change of structure and grab of liquidity. Okay, there's a difference between change of structure and a grab of liquidity. If you have an impulse, you have a correction. Okay, you have an impulse, you have a correction. For the mere fact that you have a correction here, this is a break of market structure. Okay, it's a break of market structure. Now, let's look at another scenario, guys, where you have an impulse, you have a corrective structure, you have an impulse, and you have an impulse. Okay, if you have it this way, this is no longer a break of market structure. This is a liquidity grab. Okay, this has become a liquidity grab. Why is it a liquidity grab? The difference is very clear. If you trace it to the left, this left-hand side here is not a supply zone. But if you trace this to the left of the chart, this side is a supply zone. That's why you have consolidation here, break to the upside, take up liquidity, and flush immediately. So in this scenario now, you are looking for a corrective structure here. You are looking for corrective structure here and sell. But in this scenario now, there was no supply here. That was why the market was still going correctively. So in that case, what you have here is a move to the upside. Okay, it's a move to the upside. That is why I define this level as POS. This is a break of structure. Okay, but here I don't look at it as a break of structure, because if you are looking at it as a break of structure, you'll be looking for continuation to the upside. Okay, but I'm looking at it as liquidity grab, because when it comes down, it was coming down with power. That shows that it has taken bigger order that exceeded that of the buy order that took it to that level. That was why you have this flash up and flash down. I don't know if I can show you an example. Maybe later on I'll show you an example. All right. So that's what I want you to take note of right here. And I want to tell you why I have to take this buy trade. And from here, you see this candlestick pattern is very clear. You joke with it. When you have a pullback and a break of structure, and you have this candlestick pattern, this is a buy trade, which resulted to break of structure again. Why do I call it break of structure and not liquidity grab? Because I didn't see massive order that take it down as an impulse. Rather, it came down as a corrective structure, 1, 2, and 3. This tells me that this move to the upside is going to come. So on that note, all I had to do was to take my fib of this last impulse, and right here, guys, I got 61.8. Okay, as soon as I got 61.8, I had to patiently wait for engulfing candlestick pattern on 4 hours time frame, guys. I waited for it. Of course, this one happens last week, so I couldn't do anything. I had to wait till this week, and as soon as I had this in the market, as soon as I had this, that was my entry to this trade here, and Right now, it has made about 100 and something pips. But unfortunately, in the signal channel, I call it off for like 12 or 13 pips because news was coming, and you can see by yourself, you can see how the market moves up and then immediately flows down. And so nobody can withstand, the psychology, the psychological stress involved in having your profit going up and wiping immediately. Nobody can withstand that. Only very few traders can withstand that. Is that okay? So the next one, I want us to take it. No, I've not really analyzed that Euro AUD. I've not really analyzed it. So what do I want to see in this Euro AUD? What do I want to see? We have decided that on a daily time frame, we want to see it move to the upside. Is that okay now? So you have to come back the lower time frame and see the pattern development that will give impetus to the buy trade. Of course, the market is going sluggishly. You don't expect it to develop a stronger push to the upside at the current market level, price level. So what I would like to see is to see this as a corrective structure breakdown to what? Back to this low, back to this area. Simple, back to this area. And if you take a fib of this move, you'll see that this area, this level here, this zone line up with what? 61.8. So I want to see this pair, come down that correctively or impulsively to 61.8, but I would love you to come correctively. So if we have a break of market structure here, a pullback right here is your trade to the upside. This is how I want to see Euro, or this is how I want to see it. This is how I want to see it. Okay. Let's move on. So just take a note of this structure. I'm very optimistic it's going to play out. The reason why I'm very optimistic it's going to play out is that right here you have a trend line, and we have a lot of liquidity above here. See it? We have a lot of liquidity right here. And this liquidity you have right here has not been taken. Guys, it has not been taken. Okay, look at it here. Even though you have a lot of liquidity down here, you will see that since we want to go to the upside, we want to move to the upside. Okay, we want to move to the upside. You see that if we get an entry at the sub-psychological level 1.4450 here, if we get an entry, by the time it's going up, it's going to go up with power. Okay, so that all this liquidity here will be taken. And then when it's coming down finally, for the sell, it's going to take this downside liquidity. You get? So, and again, if you look at it very well, in elementary trading and pattern recognition, there is something they call inverse head and shoulder. You see that this is the left shoulder, this is the head, this is the right shoulder. You see, it makes a perfect sense, guys. So you are going to have, I'm very optimistic at this level, you are going to have this setup, but allow the pair to drop down before you look for the sell opportunity. All right. So let's look at gold is coming down. What's going on? Let's check gold. Gold is coming down. Let's check. Okay. All right. Let's just leave it. Let's see what will happen. Okay. We have our invalidation level right here. Right here. 11690. So let's just see what will happen. Now come to the middle, 1698, and start a move to the upside. Okay. Let's just wait. It's just a pullback. There's nothing to worry about. We have this engulfing candlestick pattern. It's very rare for us to have this and have the pair blast below it. This is seen not at resistance, it's seen right at the support. So we believe that this move to the upside is going to happen. Okay, let's look at Euro card, guys. Euro card. Daily. Okay, I've always known that this Euro card is going to push down, but how hard it will push is what I don't really know. Okay, and there's a bit of confusion right here, because of course you see this level, this point, see this point. What did the market do? What did I tell you about liquidity, guys? I said when you have consolidation and the market break down and immediately come up, this shows that this break here is not a break of structure, it's a grab of liquidity, because order is taken from demand and immediately came up. So all you need to do is to wait for corrective structure and buy again. So in this case now, in waiting for the corrective structure on daily time frame, I now saw a big sell pressure right here. That's an engulfing candlestick pattern. Okay, I wanted it to come slowly to give me the corrective structure that I want to see. But instead of it to come, instead of it to come correctively, it came very impulsively. That's why I just took my eye off the pair. And if you look at it on lower time frame, you will see that it's no longer comfortable moving to the downside. Can you see? After making this impulsive move to the downside, you now begin this crawl. Can you see this crawl? That's exactly what we want to see, that confirm upside. What do I see next? I want to see a big move, a shift. You must wait for you to see a shift. Okay, after this shift, guys, now we need to see a pullback back to the discounted price. Then you now take a buy opportunity to the upside. Don't miss this setup on Euro card, guys. There are a lot of setup I will give you that even myself will miss it, but I thank God that some of you don't normally miss it. This is a setup that we are expecting here. Okay, if this space here can be filled, that would be fantastic. Okay, that would be nice. Then we expect this shift of momentum. Then the pullback is your trade, to the upside. That's my analysis on Euro card, and this upside may not go more than this level, and then the pair has to drop down straight up to the downside, depending on the nature of consolidation that you see and where the consolidation break out to. If it comes here, guys, and you're now seeing something like this, and it pull back this way, instead of it to, to move to the upside, to rally to the upside, for us to look at it as a grab of liquidity for a sell, you now move downside to grab liquidity from demand. So if it happens like this, guys, then this is a buy trade. Boom, correction, boom. That would be a buy trade if it happens like that. Is that okay now? You get now? But the question is, what if it happens like this at this level? You have consolidation, you now have a breakup and a flash down. That is a perfect setup. Can you see? Liquidity taken from supply. Let's see, this is the supply. Okay, let's say this is supply. Liquidity taken, and then immediately the market floods to the downside. So once it happens like this, we just look for corrective structure and we sell. You get? So this is how you read, market structure. Okay, and you can see at this level, liquidity is taken. Boom, equal low, taken, and immediately sweep to the upside. GBP NZD, guys. I had a wonderful trade on this last week, and I'll show you how I got it. Okay, right here on weekly time frame. You see that on this weekly time frame, you see that right here you have impulse. What do you need to see? Corrective structure before you drop. Okay, just like right here, guys, you saw an impulse. What do you need to see? Corrective structure. Okay, corrective structure, and then you drop. So if you look at it very well, the whole of this area, guys, is a corrective structure, and then this move to the downside is an impulse, and then you now want this 5-wave move to the downside. That's what we want now to complete. Pull back here, right here, pull back, and then move down. See it? This is the configuration of this pair on the daily time frame, guys. So right now, we don't want to from the weekly. You don't want to trade the weekly. Just go to the daily. Okay, to the daily. Right now, you see it here. I always told you, liquidity is a liquidity because you have consolidation right here. You have a breakdown. You have immediately a move up. This is to show that this pair had just come to grab liquidity right here at demand. Okay, so all you need to see here is a corrective structure for more upside. So where's the corrective structure, guys? Look at it here. 1, 2, and 3. Corrective structure for upside. So this pair needs to be going up. So now let's now come to the details in 4 hours. We want to analyze this this bullish candlestick. If you want to learn my style without using fib, it's very simple. My students, my mentee, they know how I do it. Okay, can you see? I want to this market is going to move to the upside. I just come and pick the psychological or sub-psychological level at the middle. Boom. Okay, I want you to come here. I put my stop loss right here, and then I'll be on my way to the upside. Let's go to 4 hours and see how this price wants to get to the level that we have marked. Okay, that's the zone we have marked, guys. Can you see? Mark this zone. I want to see this market correctively come to that zone. Okay, and then if you look at let's say 30 minutes, we see gradually it's coming there. So what I want to see, of course, you see this corrective structure, guys, it's coming here already. I want to see it develop here. I want to see it develop here. Make a move, a shift correction before I buy. Okay, I want to see something like this. I don't want to say that because this pair has come to my zone, I just pick my MT4 and buy immediately. No, I don't want to do that. I want to, because it came down ferociously. Look at how it came down. Okay, I don't want to buy a falling knife. That's the language. I don't want to buy it. If it goes up like this, let it go without me. I want it to be slow here for me to be sure that there are no sellers again. But right now, I am not sure if there are no sellers. So I want it to develop gradually, shift, correct itself back, and then I take a buy opportunity to the upside, because the correction right here is a WXY structure that is over. You see, this is a sharp move. That's an impulse. Look at the WXY structure, guys. I'll show you now. Look at the WXY structure, guys. This is 1, 1, 2, 3. This is W. Then these three waves here, 1, 2, and 3. That is X, and you have 1 corrective structure, 2, and 3. That is Y. This is a very clean WXY structure, guys. Very, very clear. It's very, very clear. And you now make an impulsive move out of the WXY structure. Okay, an impulsive move even break the market structure. So what else do you want, guys? Just want a correction back to the structural levels, guys, for you to take a buy opportunity. If you look at it very well, right here is about 50 to 61.8. So I want to see this pair, go slowly around this level, and that's where I'm going to take a buy opportunity. Just as we spotted on Euro AUD, the same thing is going to happen in GBP NZD. Let's look at Euro NZD, whether it has the same structure, guys. Let's see if it has. Oh my goodness, I really marked this level. Oh, the pair has gone. That's gone. Look at the analysis. Perfect. This is zone. I'll show you on the higher time frame how I mark the levels. Can you see the liquidity zone is spotted here? Okay, this pair was right here when I did this analysis, and I told myself, okay, we need to take up this liquidity to the downside, grab order right at demand zone, and can you see? You see what happened? Simple. See it, went up, it broke it. Can you see? As soon as it got to that level, upside, corrective structure, upside, return, upside. Clear structure. But unfortunately, I did all this while I was practicing. It was not intended for me to trade it. That's why I did not track it. But I analyzed it, and it has just happened the way it is analyzed. There's one tool that that's a pair that I also analyzed, CAD CHF. Yes. See it? Yes. Analyze this to make a sell. Can see pool of liquidity, trend line liquidity right here. So I expect it to come down, break this trend line liquidity, come over right here at the demand zone, and then we can take opportunity to the upside. Okay, so do you have anybody with any question? Okay, so there's no question, and you have no pair that you want me to check. I think this is the right point to take a stop. You say what?
No, I was just saying hi. What's your view on NASDAQ US 100, and okay, what's your view on the yen pace?
Okay.
Thank you.
All right. Daily. Of course, undeniably, this pair has given us a corrective structure for more downside. Just as right here, give us a clean corrective structure for more downside. The structure you see here, the structure you see right here, corrective structure here, is the same thing as what you see right here. So we want to move to the downside. But the question right now is simple. At this stage, does it have enough momentum to keep pushing lower? No. It's about to make some pullback. And you can see it clearly from development of an ending structure right here. Okay, you can see the ending structure is developing right here. Okay, so if you take this to 1 hour time frame, you will see that what we would love to see is simple. Okay, this market is gradually coming down, When it push up this way, it's going to push up with a break of structure. Let it correct, then you buy to the upside. When you are buying to the upside, be mindful of this zone. It's a big supply zone. You don't joke with a zone like this that is full of imbalanced candles, you know. Imbalanced candles that have created adequate supply for the sell. So I would really love to see this market, you know, buying here, closing here, and then continue its move to the downside from here. That's it that's what I see about NAS 100, and then US 30 is having a similar structure. You see it here. It's having a slow move to the downside. Okay, right here, slow move to the downside, but on a higher time frame, the flow is to the downside, but then it will love to have this push to the upside to take order right from the supply, and then I have a move to the downside. Okay. That's how I see US 30. That's most likely what it will be, because this, you know, this pattern is an ending structure. Okay, might to break up to the upside, pick order from here, and then move to the downside. That okay now? That is, you do talk of EMPS the other time? EMPS have all gone. They don't even give opportunity again. They have all gone. They are gone. Okay, powerfully bullish. They are gone, guys. Okay, all the EMPS are very bullish. Okay, this one started its own. Okay, look at daily time frame. Okay. Means that there is a corrective structure, and this one was just enough. 1, 1, 2, and 3. 1. It's just a corrective structure for this move. You can see completed right at 618. Okay, and thereafter you have this move to the upside. So it still has a long way to go. What we can do right now to take advantage of the bullish rally, though it has gone, but if it can give us a bigger corrective structure, that would be nice, guys, for a move to the upside. Give us a bigger corrective structure. For instance, if this last push here, from here to here, is giving us a corrective structure back to this level, it's maybe an engulfing candlestick pattern, guys, should buy from this level to the upside. Is that okay now? That is it, and that's what you see in most of the yen pairs. Okay, most of the yen pair will have that. Can you see this? Down, 3 waves up, 1, 2, 3 waves in the middle, up, and then this is a complete structure, guys, you know, for this wave to the upside. Okay, that's a flat corrective structure with a with a B, and with a C. And right here, guys, you have, you know, liquidity. Right here, you have equal low. And this market, I told you, whenever you have something like this, just take notes, guys. When you have an impulse, you have this, this, and this. You have this. Once you have this and you have it retrace immediately, this is a pattern that I want you to take note of, guys. Equal low here. Okay. There's break of liquidity, guys. Break of the equal low, and the market will return powerfully immediately. All you just need to do is corrective structure back here and a buy. The same thing happened here. You see the equal low, you know, the structure is taken, liquidity is grabbed, and immediately move to the upside. Whenever you have this, just look for corrective structure, guys. Just look for corrective structure and a buy. Just look for corrective structure and a buy, and look at it. This is the corrective structure, and then look at the buy to the upside. It still has more upside to go, because this is a big correction. This is a big correction that will push further more than this. So now what I will expect is yen pair to make a corrective structure and a push for more upside. Must see another corrective structure and a push for more upside. But right now, they are all bullish. You can't touch them, you can't buy, and you can't sell. You have to wait, let them make corrective structure. Is that okay? If you look at, say, Jeff, see it, all of them, they are bullish. Look at it, corrective structure, done, more upside. Take liquidity, upside, correction, upside, correction, upside. That's how we treat all the yen pair right now. Is that okay now, guys? Is that okay now? So we'll have to call it a day at this point. I'm going to make the video available on YouTube. All right, so see you in the group. Bye.